Welcome in. I am the CryptoBullGod, and in today's video, we're going to perform a health check on Bitcoin. If you appreciate the content, hit the thumbs up button, subscribe to the channel, and drop a comment. I appreciate engaging with everybody on this channel. You can find me on the Twitterverse at CryptoBullGod. You can also find me on Tradingview, and Instagram at CryptoBullGod. Just a quick disclosure that none of what I'm sharing is financial advice. I'm looking to simply educate and to spread sound technical analysis throughout the community to help others. However, the ownership falls on you to make your own personal financial decisions. So with that being said, let's get into it. The first chart we're going to take a look at with Bitcoin, for those familiar with this channel and the content that I put out, this should look very familiar to you. I've gone through extensive analysis on the 12-hour chart for Bitcoin, okay? I have a couple videos out there. I would encourage you to take a look at them. I can actually link them in the description to be helpful. I would check those out. But there is historical significance surrounding the 250 simple moving average on the 12-hour chart, okay? Commonly what happens is, this is very important, keep this in mind, as the 200, which is the pink line, flattens out, as the 200 simple moving average flattens out, and as the 50 crosses above it for a golden cross, we don't want the 200 slanting down. We need this 200 SMA pink line right here to sort of flatten out and begin to curl up, okay? Historically, when we see that golden cross occur, the odds are strongly in our favor that we are going to see strong bullish momentum to the upside. What we saw here, when price action got above the 200 SMA, we saw the 200 sort of flatten and the 50 get above it. This sort of fake out price action where we got below it and continued further is less likely. It's more likely that when that occurs, we'll see continued upside in the price, okay? And again, as a chartist and as a data scientist, there are no guarantees with the price data. All we're using is historical data to ascertain what is most and least likely, right? So what do we want to look for here on the 200 simple moving average? Well, first off, we have this red descending line of resistance. You can see last time we broke it, we sort of came around here, crossed above, and then broke down. So the first thing we want to do, okay, if we zoom in on the chart here, we want to break above this descending line of resistance here, okay? We want to break above it and then maybe back test it and continue higher. We're also in a rising channel here. At some point, we want to break out of the rising channel, maybe back test and continue higher. We want to break out of this rising channel. It's not a rising wedge. A rising wedge would be bearish, but it is a rising channel, okay? And what we want to see is we want to see price action get above this rising channel, all this price action right in here. And the key thing we want to look for on this 12-hour chart, we want to get above this 200 simple moving average and stay above it. We want the 200 simple moving average to flatten out, and then we want to see the 50 cross above it. That's really all you want to look for on the 12-hour chart. So the 12-hour chart is one chart I would keep in mind, all right? The 3-day chart, okay, performing a health check on this chart says that we're seeing some bearish price action below this key moving average. I haven't seen anyone else talk about this moving average. It's the 125 simple moving average on the 3-day chart. It's basically just looking at the average of the 50 and 200. That's how I came up with that. But why did I derive this? And well, not why did I derive it, but why do I find meaning behind it? Look what has happened historically. Anytime we've gotten candle body closes on the 3-day below this key moving average, we bleed for a long period of time. This was roughly August 14 all the way until October 15 until we broke above it. That was over a year. It's like 14 months of price action before we broke above and got above. You can see this red circle here denotes when we got candle body closes above the 125 simple moving average, and you can see we went on a huge run, okay? That was back in 2014 and 15. What happened in 2018? Well, look what happened. When we broke below the 125 simple moving average, it then acted as resistance. You know that. If you break a key level of support, it acts as resistance to get above it. We couldn't get back above it. We had sustained price action here below it, June 18 all the way till about just the start of May of 19. This is June of 18? Yeah, so just less than a year of price action below this moving average until, again, we broke out and had a sustained price action up. Now, this was the beer virus crash. This was a V-shaped recovery. So the time we spent below here was not very great. I mean, it was just from March until April. So it was a March. I mean, it was a month. So this was truly a V-shaped recovery. And then but you can see once we had candle body closes above this simple moving average, we had that parabolic run back in 2020 going into 2021. So what's going on in the present day? Well, what's going on in the present day on the 3-day chart? We broke below it. Okay, we had a candle body close right at the end of December of 2021. So we've been under here for around 8 months. Around 8 months, we've been under this simple moving average. Okay, look at all this price action. See how we challenged this simple moving average back in April of this year, and we couldn't get it back above it and broke down. So what we want to see, and that's what the red circle is denoting, is trying to capture the general area where this moving average will be at. We want to see price action kind of come up here, stair step up here, challenge it, and then break back above it. Candle body closes, not wicks. They're an expression of volatility. But when candle body closes above that 125 simple moving average on the 3-day, to remain convicted that most likely price action will continue on and upwards. Okay, so this is the 3-day chart. Let's take a look at the weekly chart. Now, the interesting thing with the weekly chart that I have set up here, this is looking at something called the Heikin-Ashi candles. And the Heikin-Ashi candles, the best way to explain it is, it's a different kind of candlestick that when you present it on a chart, you're either getting green or red candlesticks that give you a leading indicator of where price may most likely be headed next. Okay, what sort of trend should be following. You can see, now this was a fake out here, but once we turned red here, sustained price action down. When we turned green here, sustained price action up. Red here, price action down. This was a lot of chop, but once we turned red here, back in April of 22, we rode this thing down from, 44,000 all the way down to 17,000. We have just turned green. Now, the other thing that I presented to my audience on Twitter, which is why you want to follow me on CryptoBullGod, look at the 200 simple moving average on this weekly chart. Is there anything you notice about this chart that I've pointed out here? And we could go back in time to 2015, but let's just focus, and the same sort of thing played out. But is there anything, before I speak to it, that you notice in terms of why I've pointed out with these orange circles the price movements up at the 200 SMA and the Heikin-Ashi candles? Well, the reason that I'm pointing out the price action here is that once we've been near the 200 simple moving average and we've had the Heikin-Ashi candles turn green. Now, this was a little bit of a fake out here. You can see I'm pointing this out in December of 18. But here in February 19 and here in March of 20, when we were near the 200 simple moving average on the weekly and the Heikin-Ashi candles, which tend to be a leading indicator of trend reversals in price direction, when the candlesticks turned from red to green, we had strong momentum up, which were the green arrows. The relative price appreciation is shown here, 345% moves as of the day that we bottomed at the 200 simple moving average at the level that 200 simple moving average was at. This is showing a 1,106% return from where the 200 simple moving average was at when we bottomed to the top of our price movement, okay? So what I did here was I said, okay, assuming that we have bottomed in June of 22, let's look at where the 200 simple moving average is at, and let's just take an average of these two returns, which would be 679%. That puts us at around $170,000 for Bitcoin. And I know that's hard to believe at this point, but it's a data point that I derived just assuming an average return from these two data points, and based on the Heikin-Ashi candles turning green at the time of having a bottoming candle near the 200 SMA and where that 200 SMA data point was at. So it'll be interesting to see if these Heikin-Ashi candles are true trend reversal indicators once again for the third time in a row. The other thing quickly to point out on the weekly chart right now from a health indicator perspective is it's very bearish to see the price action closing below the 200 SMA. That's what we had here for these weeks. Look, a close below, close below, close below, we're below, below, got above, above. So right now it is bullish, to see that price action is responding favorably at the 200 SMA, and we're starting to get a candle body close for the second week in a row at the moment above the 200 SMA. It's very good to see, very encouraging. This is the 10-day chart. Now, I haven't seen anyone look at the 10-day chart. I like evaluating the 10-day chart personally, but one of the things I pointed out on the 10-day chart for Bitcoin, and again, if you appreciate this content and it's lending itself to some unique and interesting views for you, and you're finding it educational or informative, I would appreciate if you spread the content, spread awareness, carry the education forward. You hit the thumbs up button and you dropped a comment. It helps support the channel, as everyone always says. It really does. The one thing I pointed out on this 10-day chart, this is a 200 simple moving average once again. You can see in March of 20, we wicked to this moving average. We did the same thing here when we potentially have bottomed, okay? And we've since been moving up. So what I want to look, and I've spoken to this before, I want to see this descending line of resistance broken with candle bodies, maybe back tested and continued movement up, okay? But our real key area, some people would say 28 to 30. The range I have here is roughly 29,000 to, we're going to say 29 to 32. You really want to see, once Bitcoin gets up in this $29,000 to $32,000 range, how does price respond? It should act as temporary resistance, but if the price movement has strength behind it, we should see it break up above and maybe back test, which would be great. It would actually be great to see stair steps formed, okay? Less of a parabolic movement so that when price comes down, we have tree branches, as I've used before. Having a tree with no tree branches with a parabolic price movement lends itself to when you fall off the tree, you have nothing to grab onto, right? So what we really ideally want to see as we're setting the trend here, we want stair steps, right? We want stair steps because as the price comes down, it has areas to gravitate to, right? Without that, if we're just moving up and price comes down, there's nothing here and it can just go straight down, okay? So we really want to see some gradual stair steps up, even looking forward to years out from now. So when we do have a massive correction, there is price confluence being developed and structure within the chart for price to gravitate towards. So we want price to crush our enemies. We want to crush this descending line of resistance. We want to smash 29 to 32, back test it, and create higher highs and higher lows. That's what you want to look for on the 10-day chart, okay? We really want this 200 simple moving average on the 10-day chart to hold, okay? Now, the last chart I have for Bitcoin, this is a monthly view. Now, what's really interesting about this view, a couple things I would point out, and again, we're looking at the prior two corrections and wave movements, because again, I still feel my view is that we have one final movement in this larger overall cycle prior to seeing a massive correction in the market. This is not the massive correction that I foresee happening a couple years down the road here. So there's a green trend line here. Look at the touch points here, here. We wicked below but stayed above it, and now we're still above it here. There's also this other trend line. Okay, so we're holding that trend line. So in a monthly view, you want to draw the same trend line to make sure that this thing is holding to express further strength in the price. The fact that we've maintained the green trend line is a very good thing. Okay, very good thing. Now we lost this black trend line, which is not so good. Okay, you can see once we had this crash back with the beer virus, we actually had this trend here that we temporarily broke but got back above, temporarily held it and broke below. Now I would theorize that once we come up to this level in here, which also happens to coincide with that $29,000 to $32,000 range, this trend line will act as resistance. What we want to see is we want to get back above this black trend line, hold it as support, and continue up. That's what we want to see. You can draw these same trend lines in TradingView if you have TradingView and keep track for yourself. The other thing I'd point out on the monthly, there is a 20-day simple moving average here shown intentionally on the monthly chart for Bitcoin. Look at the times price has been below the 200 simple moving average, okay? And the buying opportunity. Below the 200 simple moving average and the buying opportunity. Below the 200 simple moving average, the buying opportunity. Below the 200 simple moving average, and I will theorize out in 2023, the buying opportunity. Okay, that's something else to keep in mind. The last thing I would point out on the monthly chart, the last time when we had our bottoming candle back here in December of 18, it took 6 months until we saw the market top out. We bottomed in March of 2020. It took 13 months until we topped out. So what I am theorizing is if this is truly the bottoming candle, which I believe it is, that we saw back in June of 2022, if we had the same rough time frame for Bitcoin to top and for altcoins to top shortly thereafter, or relatively in the same time frame, you would see Bitcoin topping somewhere between December and July of next year. And I would lean, based on how current price action is looking, I would lean more towards the latter half of this. So I would lean more towards the first quarter, like between March and July of next year. But when the market moves quick, I mean, keep in mind, people forget this because they get very emotional. When Bitcoin really started to make price movements in October of 2020, we went in October 2020 to April. Now, that was 6 months. In 6 months, we went from, now this is Bitcoin, went from 10,000 all the way up to over 60,000. It pulled a 6x in 6 months. 6x in 6 months, right? And your altcoins far outpaced that. Some of the altcoins did 100x, 50x, 30x, 20x, 70x, 80x. So it's important to keep in mind, even though people are very salty right now, once price truly does turn around, okay? For instance, on this chart, what I would be looking at from a health perspective for Bitcoin, first off, most importantly, maintain this green trend line. Maintain this historical green trend line since we bottomed in January of 19, okay, or December of 18. But what I'd look for is to regain support on this trend line here and continue price movement up. People forget, even though they're real salty right in here, they're all salty in here. Once price begins to move, 6, 7, 8 months, we could be well above $100,000, okay? History suggests this. I'm just using historical data to tell you this. This isn't my fantasy or dream that I'm trying to turn into a reality. This is just historical data, okay? And people get emotional and greedy, and they'll make the same mistakes they did up here, thinking it's going to go to $1 million, though people will be calling for a super cycle. Bitcoin's going to $500,000. So those are the things you have to watch for, but let's not get ahead of ourselves. These are the things you want to watch for on these charts. So again, 12-hour chart, 3-day chart, weekly Heikin Ashi, the 10-day chart, and the monthly chart. If you appreciated the content, please drop a like, leave a comment, subscribe to the channel, hit the little bell icon, and until next time, spread awareness and carry the education forward.
So what you gonna do, $1 on CryptoBullGod and his crypto maniacs and the entire cryptocurrency market run wild? Oh.